Welcome to being financially shown growth, but the real winners might you expect. We're going to take a deep dive into the top performing stocks and sectors of H1 2025 and what they reveal about the future of the markets. In the first quarter of the year, the markets began with a strong performance, only to slow down in the second quarter. Despite this, inflation remained stubbornly high at around 3.1%. The Federal Reserve decided to keep interest rates steady, which had an impact on investor behavior and favored certain sectors. So, who were the standout performers in the first half of 2025? Surprisingly, the tech sector was not the top performer. Instead, it was the healthcare and renewable energy sectors that stole the show. With increased focus on sustainability and advancements in healthcare, these sectors saw significant growth and delivered impressive returns to investors. The healthcare sector, in particular, benefited from ongoing developments in medical technology, pharmaceuticals, and healthcare services. With an aging population and increasing demand for innovative healthcare solutions, this sector has proven to be a reliable investment choice for H1 2025. On the other hand, the renewable energy sector shone bright as the world continued its shift towards clean and sustainable energy sources. With global initiatives focusing on reducing carbon emissions and combating climate change, companies involved in renewable energy production and technologies experience substantial growth. But what does this tell us about the future of the markets? It indicates a potential shift in investor sentiment and an increasing emphasis on sustainable and socially responsible investments. As the world grapples with environmental challenges and an aging population, sectors that address these issues are likely to continue outperforming traditional industries. As we look ahead, it's clear that the landscape of the market is evolving. Investors who are able to recognize and capitalize on these trends will be well positioned for success in the future. So keep an eye on the healthcare and renewable energy sectors as they continue to lead the way in shaping the markets of tomorrow. Top 3 performing sectors. As we review the top performing sectors so far this year, it becomes clear that certain industries have stood out due to various factors driving their success. Let's delve into the details of the top 3 sectors that have outperformed the market. Energy YTD percent performance. 30%. The energy sector has seen a remarkable surge in performance, largely attributed to the escalating tensions in the Middle East that have led to a significant increase in oil prices. As geopolitical risks continue to impact the energy market, investors have flocked to energy stocks, driving up their value and contributing to the sector's impressive growth this year too. AI Tech YTD percent performance. 40% artificial intelligence technology companies, such as NVIDIA and Palantir, have been leading the pack in the AI tech sector, reporting outstanding earnings that have exceeded expectations. With advancements in AI technology revolutionizing various industries, these companies have been at the forefront of innovation, attracting investors seeking exposure to the rapidly growing AI market. Healthcare YTD percent performance. 25%. The healthcare sector has also seen significant growth, driven by a flurry of biotech mergers and acquisitions that have fueled investor interest in the sector. Additionally, the success of a breakthrough weight loss drug has boosted healthcare stocks, reflecting strong performance and promising developments within the industry. Overall, these top-performing sectors offer a glimpse into the broader trends shaping the market landscape this year, from geopolitical tensions driving energy prices to technological advancements propelling AI tech companies to success and innovation in healthcare driving growth. These sectors have demonstrated resilience and potential for further growth in the months ahead. When it comes to the top individual stocks of the year, there are several standout companies that have caught the attention of investors. Let's zoom into the top 5 individual stocks and their impressive performances this year. Tesla Inc. TSLA YTD percent gain. 365% Tesla has been a frontrunner in the electric vehicle industry and has seen a significant surge in stock price this year. The company's successful launch of the Model Y, along with strong delivery numbers, has contributed to its remarkable YTD gain. To Zoom Video Communications Inc. ZM YTD percent gain 401% with the shift to remote work and virtual meetings. Zoom has become an essential tool for businesses and individuals. The company's innovative video conferencing platform has led to a surge in revenue, driving its stock price to remarkable heights. This year, Moderna Inc. mRNA YTD percent gain. 657% Moderna has been at the forefront of developing a COVID-19 vaccine, and its promising clinical trial results have propelled its stock price to incredible heights. The company's potential breakthrough in the fight against the pandemic has driven strong investor interest. Or Amazon. Com Inc. AMZN YTD% gain. 82% Amazon's dominance in e-commerce and cloud computing has continued to fuel its impressive stock performance. The company's robust revenue growth and expansion into new markets have contributed to its solid YTD gain. DocuSign Inc. or Docu YTD percent gain 198%. DocuSign's electronic signature and agreement platform has become increasingly vital in a remote working environment. The company's strong financial performance and accelerated digital transformation across industries have driven its stock price to remarkable gains this year. These top individual stocks have certainly stood out with their exceptional performances, driven by factors such as new product developments, revenue beats, and major industry events. As investors continue to closely monitor these companies, their impressive YTD gains reflect their resilience and ability to thrive in challenging times. As we look ahead, it's important to consider what the future may hold for the current market trends. Are these trends likely to continue, or are we approaching a turning point? Many investors are wondering if these sectors are now overbought and if it's time to consider a rotation to value, small caps, or international investments. First, let's consider whether the current trends are sustainable. It's clear that some sectors have experienced significant growth in recent months. However, it's essential to evaluate whether this growth is justified or if it's a result of market exuberance. While it's impossible to predict the future with certainty, it's crucial to carefully analyze the underlying factors driving these trends and consider whether they are likely to persist. Secondly, there is a growing concern about whether certain sectors are now overbought. Overbought conditions occur when the price of a security or sector becomes inflated beyond its intrinsic value. This can lead to a correction in the market as investors realize the disconnect between prices and fundamental value. As such, it's vital to assess whether the current valuations are sustainable or whether they are due for a correction. Moreover, many investors are considering a rotation to value, small caps, or international investments as they seek to diversify their portfolios and capitalize on new opportunities. The rotation to value refers to a shift in investment strategy towards undervalued companies with strong fundamentals. Additionally, small caps and international investments may offer growth potential in markets that have been overlooked during the recent surge in certain sectors. In conclusion, as we look forward, it's essential to critically evaluate the sustainability of current market trends, whether certain sectors are overbought, and whether a rotation to value, small caps, or international investments may present new opportunities. By staying informed and remaining adaptable, investors can position themselves for success in the ever-changing market landscape. Take the time to assess your current financial situation and set specific, achievable goals for saving and investing. Explore different investment options such as stocks, bonds, and mutual funds to diversify your portfolio and manage risk. Consider consulting with a financial advisor to develop a personalized investment strategy that aligns with your goals and risk tolerance. Stay informed about market trends and economic indicators to make informed decisions about your investments. Regularly review and adjust your investment portfolio to ensure it continues to reflect your financial goals and risk tolerance. Hey everyone, are you currently holding any stocks in your portfolio? We want to know. Drop a comment below and let us know which stocks you're currently invested in. And if you're interested in learning about the worst performing sectors in the market, make sure to hit that like button and subscribe to our channel. We'll provide you with a breakdown of the sectors that are struggling so you can stay informed and make the best investment decisions. Engaging with our content not only helps us understand your interests and needs, but also allows us to tailor our future videos to provide you with the most relevant and valuable information. Your feedback and support mean the world to us, so don't hesitate to get involved and join the conversation. So don't wait any longer. Drop a comment, hit that like button, and subscribe to our channel to stay updated on the latest market trends and investment strategies. We can't wait to hear from you.